Good day, everyone. Today we are going to look at the candlesticks that we analyze in terms of investment analysis. So we'll look at that from the beginning and look at how a candle is structured and how to read a candlestick. So what you have here is what a candlestick looks like. It has a body, which is this rectangle shape. Then it has got wicks, which is this line that projects from the middle of the body of the candle. A wick can be at the top or at the bottom, or there can be none at all on a candle. So this is what we call the upper wick, and an upper wick represents the highest price of the day, and a lower wick represents the lowest price of the day. The upper part of the body can represent the opening or closing price. The lower part of the candle can also represent the opening or the closing price. It all depends on the direction of movement of the price for that day. Now, why do we call it a candle? Well, if you look at this without the bottom wick or a tail, it will just look like a candle that has got a wick. Remember, a wick on a candle is what we light that string. So if you cut a string probably 1/10 through the top and 1/10 through the bottom, you're going to be left with a string on each side. So this string is what we call the wick. So a candlestick really looks like a normal candle that you have, which you use when probably there is load shedding and you need some lighting. So again, to reiterate, the body of the candle at the bottom or at top represents the opening or the closing price of that share for the day. Now it depends on the direction of price movement, because prices of shares can go either up or they can go down. So the direction would determine where the opening and closing will be. If the price has gone down, it means the open is higher than the closing. So you'd have an opening price at the top here for a down day, and the closing price would be at the bottom here. If you hear that the share price went up, then you are going to have the opening price at the bottom and the closing price at the top. So again, you must be able to understand this concept and make sure that you have grasped it, so that when you open a chart, you are able to see what the candles are telling you, either individually or as a group of candles. So now on this slide, we are talking about what we call candlestick sentiment. Now, the sentiment of a candle is what the candle is telling you about what is happening in the market at that particular time. Remember, candlesticks are formed for a particular time frame, which can range from a minute candle up to a monthly candle on most charting platforms. On this one, we've got a green candle. Now, this candle does not have wicks, so which means the highest price and the lowest price are where the body of the candle is formed. In this case, we have got a green candle. Green candle, or sometimes on other platforms, blue candles can represent a price which has gone up. Now, what this means is that the price opened at the bottom here. That's where the price opened. Then it rose up through the day and it closed at that point. So this is a bullish candlestick. A bullish candlestick denotes a rise in the price of the share, or sometimes it can be a commodity or a forex pair. On this side, we have got what is called a bearish candlestick. Bearish candles are mostly red, and they mean that the price has gone down. So without looking at the opening and closing price, when you see red, you know that, okay, the price has gone down from the opening price of that day. In this case here, the opening price would be at the top. Then the price drove down and closed at the bottom of this candle. Now on this bearish candle, you can see we have got wicks, both on the bottom and on the top side. What this means is that though the share price opened here and it closed at this point, it actually went up at some point beyond the opening price. And at some point it went down beyond the closing price. That is how wicks are formed. In other words, a candle can be explained in terms of OHLC. O meaning opening price, C meaning closing price, L meaning lowest price of the day, H meaning highest price of the day. So this is how you gauge the sentiment of the candle. It tells you whether people are moving into a share or they are moving out of a share. If it's a green candle, then you know that people are moving into a share, which means the price is being pushed up. If it's a red candle, then you know that people are moving out of the share and the price is being driven down. So that's it for this lesson. If you can, try to go into any charting platform and try and see if you are using tradingview.com or sharedata.co.za. You can be able to see these candles on the charts. Look at the chart. If you highlight on a single candle, check what it tells you on the OHLC. It will show you the opening price, closing price, highest price, and lowest price. In some instances, it will give you the volume that was traded on that day as well. So thank you for your time in this lesson. We will move on to another lesson as we study about candles deeper.